I want to quickly talk to you about a merchant acquirer. And if you are actually a merchant, it's important to know a merchant acquirer because a merchant acquirer can really save you on fees and save you in certain transactions. Okay. But long story short, if you think about a merchant acquirer, it's just a type of bank or a financial institution that processes card payments on behalf of businesses. Okay. So you have flexibility, you have affordability, and you also have efficiency. So, also known as the acquiring bank or merchant bank, the acquirer is actually a financial institution, so a bank, a credit union that handles a merchant's account so that they can accept credit card or debit card payments. So basically, it's a financial services provider that acts on behalf of merchants. So if you are a merchant, your merchant acquirer will be the financial institution, Chase, Wells Fargo, Bank of America, PNC, or Navy Fed. Okay, that can really that acts on behalf of that acts on your behalf. Okay, so the acquirer will settle card transactions into a merchant's account. In some cases, the payment processor and the acquirer are actually one and the same. And importantly, and I need to insist on that, the acquirer actually has to be licensed by financial regulators and card schemes, Visa, American Express, Mastercard, or Discover. So businesses that engage the services of a merchant acquirer do so because the payment process must adhere to strict data protection rules, okay, and regulations such as a PCI DSS, for instance, okay. So that's actually the A to Z when you think about merchant acquirer. But now I want to explain to you in granularity what an acquirer actually does. So, what does a merchant acquirer do? Well, a merchant acquirer will have a license that permits it to perform certain actions, such as issuing business accounts. A merchant acquirer will also assess fees to the merchant on behalf of the issuers and processors, secure funds from the cardholder's issuing bank, and deposit these funds into the merchant account, so your account, and monitor merchant risk and regulations. So when it comes to money, you know that there's regulations everywhere, right? So I want you to look right now on the screen. This is actually a little bit of what the merchant acquirer does in the credit card processing model. I want you to take a few seconds to look at this. So now let me talk to you about payment processing. So once you understand what a merchant acquirer does, what it is and what it does, let's talk about what a payment processor. So a payment processor is a little different. What a processor does is that here you have a company or service that facilitates electronic transactions between customers and businesses by processing and authorizing credit card, debit card, and other digital payment methods such as digital wallets. So, the primary function of a payment processor is actually to verify the transaction details, ensure the availability of funds, and securely transfer the funds between the customer's account and the business's bank account. So, you have this sort of reliability and accountability. So, how does how do things really work? So, when a customer makes a purchase, the payment processor captures the payment details and forwards them to the necessary financial institutions for approval, right? So you have efficiency there. The processor communicates with a customer's issuing bank or card network, such as Visa or MasterCard, to confirm fund availability and detect potential fraud. So once the transaction is approved, the payment processor facilitates the secure transfer of funds from the customer's account to the business's merchant account. So this is kind of cool because it really adds an extra layer of accountability but also security. So payment processors also help businesses adhere to compliance standards such as what I told you a little earlier, the PCI DSS, to actually protect sensitive payment data and reduce the risk of fraud. So now there is a quick difference to note between an acquiring bank and an issuing bank. So the main difference between the two is that an acquiring bank oversees the merchant's accounts, while an issuing bank manages the cardholder's account. So funds from the cardholders funds from the cardholder's account held by the issuing bank are transferred through the payment process to the acquiring bank. So the acquirer is responsible for receiving payment requests from payment gateways. So that's Stripe, that's PayPal, that's Visa, that's Mastercard, and so on and so forth. Also, contacting card schemes to request payment authorization. Again, Visa, Mastercard, Discover, American Express. Passing the payment success or decline message back to the merchant, settling funds minus fees into the merchant accounts. Okay, so this is kind of important. Now, the issuer is responsible for issuing cards such as credit or debit cards to customers, authenticating cardholder details during transactions, checking whether the accounts hold sufficient funds or credit to complete the payments, and also releasing funds to the acquirer upon successful authorization. So let me really talk to you about the operation here. If you think about a merchant acquirer, you need to understand that there are actually further differences between payment processors and acquirers. Okay, and payment processors and acquirers play different roles in the overall payment processing system. Okay, with each serving a unique purpose or in facilitating transactions between customers and businesses, especially if you are talking about several countries. If you are speaking about payment processing in the same country, such as in the states, okay. But when you're thinking about something international, things become a little complicated. So although the roles of a processor and acquirer may appear similar at first glance, it's important to understand that the individual functions and relationships within the system. Okay, let me give you a quick summary of the difference between payment processors and acquirers. So, what is the role in the transaction process? For our payment processors, well, the payment processor facilitates and authorizes electronic transactions between customers and businesses by verifying the transaction details, checking the availability of funds, and securely transferring funds between customer and merchant accounts. And the acquirer, when it comes to the role in the transaction process, the acquirer partners with businesses to process credit and debit card transactions and is responsible for establishing and maintaining merchant accounts, facilitating the authorization and settlement of transactions with issuing banks, and assuming the risk of chargebacks, fraud, and disputes. Now, what's the relationship with a business? Well, in terms of payment processor, the payment processor works as a service provider for the business, processing and authorizing transactions on their behalf. The business does not have a direct relationship with the processor, but does have a direct relationship with the payment service provider, who acts as a middleman between the business and the payment processor. So, in some cases, the payment processor and payment service provider are the same entity, as with Stripe, for example. In those cases, businesses do have a direct relationship with the processor. What about the acquirer? Well, by providing and managing the merchant account, the acquirer has a direct relationship with the business, and the acquirer is responsible for underwriting the merchant accounts and assuming some level of risk in case of disputes or chargebacks. Again, if the business is working with a comprehensive payment service provider, there is no need to work with a separate acquirer. Okay, so something to really keep in mind. So, what's the relationship with card networks and issuing banks? Well, for a payment processor, the payment processor communicates with card networks and issuing banks to verify and authorize transactions. The processor typically has agreements with multiple acquirers and works as a middleman between acquirers and businesses. And in terms of acquirer, the acquirer communicates with card networks and issuing banks to authorize and settle transactions. Acquirers are members of card networks and have agreements in place to process transactions on their behalf. So this is something you want to keep in mind. Okay, so both payment processor and acquirers are key to a smooth and secure, let's say, secure electronic payment processes. Really, So payment processors handle the technical aspects of processing and authorizing transactions, while acquirers manage the financial piece, including establishing merchant accounts and facilitating communication with issuing banks. So basically, payment processors and acquirers do work together, okay, in terms of transaction initiation, transaction authorization, approval or decline, and settlements. So you have some kind of collaboration at that level, okay? And basically, for instance, when it comes to transaction initiation, when a customer initiates a payment within a credit or debit card, the business's payment gateway securely captures the transaction details and transmit them to the payment processor. For transaction authorization, the payment processor forwards the transaction information to the acquirer, who sends it to the card network, and the card network directs the transaction to the issuing bank for authorization. So that this is something to really think about, especially from a scalability point of view. Let me give you a few extras here. So when you think about merchant acquirer, you have to really ask yourself, what is the big difference between a merchant acquirer and a payment processor? So the merchant acquirer and payment processor perform two separate functions during a transaction, really, because it's all about safety, it's all about accountability, it's all about reliability. So after a payment gateway has captured a cardholder details to initiate a transaction, it is actually the processor that acts as the middleman between the card scheme, issuer, and your acquiring bank. So by card scheme, I'm speaking about Visa, MasterCard, Discover, or American Express. So in other words, the acquirer receives and transmits messages via the payment processor to other entities in the payment chain. The acquirer is then responsible for handling the transfer of funds from the customer's bank to the merchant's bank. Okay, so this is the kind of reliability you want to have. However, in some cases, one financial institution can perform the role of both acquirer and payment processor. So it's not always a matter of payment processor versus merchant acquirer, but of which providers offer both, right? Now, who needs a merchant acquirer? Do you need a merchant acquirer this year? Let's talk about that. Well, any business that wants to trade online via app, telephone, mail, or in stores needs an acquirer to process payments and settle funds. Acquirers connect directly to the card networks and alternative and local payment brands. As a customer makes a transaction, the acquirer will receive a request for authorization, and this information will be forwarded to the issuing bank for approval. And once the transaction is approved, the payment will be deposited into the merchant's account. Okay, of course, there is a more to payment than getting paid. So acquirers increasingly provide other value adding services. Okay, for instance, these services might be around loyalty. They might be around offers and incentives, data analytics, risk management, access to credit, and or working capital, and so on. So how do you choose an acquirer this year? I mean, you have to really think about what really works for your specific brand. So basically, although acquirers do the same or similar things in terms of routing payment messages and settling funds, not all are created equal. I mean, you want to really think about a provider that has a proven track record. Okay, some some providers or some acquirers are stronger in certain markets or regions, while others can process payments globally. Some have developed products or services for specific industries, geographies, or business models. Others offer a general e commerce or retail proposition or both. It really depends on what you're looking for. Okay. So, how do you actually choose the right acquirer for you? Well, first of all, think about variety of merchant acquiring services offered. So, most acquirers offer a standard package for general retail or e-commerce businesses, especially if you are in a specific niche, but the niche has to fit what the the variety of services offered. Actually, what I mean by that is, let me give you an example. If you run a subscription business, want to take payments in app as well as online, or have a specific sector or country requirements, you want to ask a prospective acquirer about what's available for your business. Okay. For instance, subscription businesses may require an acquirer to support recurring transaction through an API. That's number one, variety of merchant acquiring services offered. Number two, you want to have easy onboarding and integrations. So onboarding should be smooth. Acquirers should gather all the necessary documents in a streamlined way, creating as little hassle for your business as possible. Right. The process should be set up to get you accepting payments straight away. So once onboarded, you must be able to access any integrations seamlessly, such as a hosted payments page. You don't want any hurdles in the way of smooth payment processing, especially when it comes to scalability. Next, you want to think about broad payment method acceptance. So different customer groups and countries have their own ways of paying. Okay, so you have to really adapt this to your geography. So depending on who you sell to and where, it may be worth considering acquire able to offer local or alternate payment methods in addition to cards, for example, bank transfers, mobile payments, BNPL, and so on and so forth. Right. So that's kind of important. And wide-ranging card scheme coverage is also important. So you want to look for acquirers who can offer more than just Visa and Mastercard. So schemes like American Express and Diners Club are also important. So consider factors such as local merchant acquiring. Your acquirer should cover your main markets as well as those you are looking to expand into. So local acquiring has lower cost than cross-border acquiring, as well as higher authorization rates. So you also want to think about multi-currency payment acceptance. So if you sell, let's say, if you sell online or have physical stores in more than one country, it makes sense to price in local currency. Find out whether a prospective acquirer can enable this, plus how the settlement of sales works. You should be able to process and settle in the majority of your target customers' preferred currencies. And finally, think about having a strong merchant acquiring support. So, accepted digital markets could help digitalize the other aspects of your business, such as customer loyalty, liquidity, and reconciliation, to name like a few. So consider the support available from a prospective acquirer, both in terms of, let's say, in terms of products, but also people. Okay, there is actually more to payments than getting paid. Actually, for example, does the acquirer send thorough, thorough merchant acquirer statements? I mean, statements should be issued every month by your acquirer, detailing your business's transactions, sales activity, and payment processing fees during that period, okay? And contain important insights to help you understand and optimize your operations. So, or you can just see if you can get a dedicated account manager to help with customer support when you really need it. So, this is something to really think about. So, as a coda in today's conversation, when I explain to you what a merchant acquirer is and what he or she does, and I mean what the company does, and I give you the overview, the operation, the extras, and now the coda. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.